to test it from the underside, but we came to test it from the upper side, and we formed the inverse head and shoulders that I was talking about not even 5-10 minutes ago. And basically, it shows a test of the underside of that node as well that we've been using all morning. This is the original green zone and red zone for this first range that basically could be used like this. Essentially, the gray zone represented a gap that it used to have long ago, which it looks ironically like it put some volume into that and made a node there. The purple zone represents the middle area. Green zone's the support, red zone's a resistance. Similar to how we have a range up here with the red zone and green zone, it provides a gold zone as well, something that stands out amongst all. Then a smaller range at the bottom where there's a red zone and green zone separated by a purple zone as well. Now, funny enough about this range, it's actually it's the newest range out of all of them, and it was from over here. Basically, that purple zone was actually a 188 in the past. Ironically, it's an 88 today. And of course, in the morning, we were talking about the movement from the low um, coming back in the form of a spike and being separated by a consolidation that had an equal size spike on either side, and then returning back to the equilibrium, back to the middle of the range, and to the low of the node. Ironically, that after all of that equality and all of that similarity and everything being so even, making a fib retracement on this move, you could see that the green zone was literally the 61. It formulated like that, so that in the past as well, it even looks like the 61 was being used. Ironically, that 61 didn't even exist there at the time. Down here, where we just respond to. So, I would suspect that at the very least, we could understand that those are all facts. Like we did make the node inside of the red zone, green zone. The red zone, green zone was here from over a year ago. It had a couple particulars to it, and it looks like it's using those particulars again, but in a different way. The inverse head and shoulders is threatening the neckline now. And of course, any hedges that were taken or any long trades that were taken are profitable at this point. I would suspect that they would be protected in the event that you did take them because it's not a very safe environment, essentially. Understanding that the POC is a little bit up into the node, we could put a little bit of volume towards the other side of the node, making it a little bit more even on both sides. After all, one thing that it has been interested in doing is separating consolidation with equal size distances on either side. Like I showed in the morning, we can take a look at this node in this area that we had here at the beginning of the day and see how similar it was to the movement that we had on the bottom and see how similar it was to the movement that we had on the top. All of these things are facts, and in my opinion, that they're meant to be understood in order to have an understanding of the situation. Because it's not a matter of my opinion that it did that. What was my opinion is that it would come back to test the blue line multiple times and that no stops were safe above it. Any hedges could target that level and beyond to protect any long trades that were kept from yesterday or the day before. I did remember mentioning that the way of the day was to maintain the long trades from the previous days, but instead hedge against them. Keeping them and hedging against them. And effectively, anybody that hedged against them has profited to this move here. But if you haven't, it's not a necessity. The necessity is that you retain the hard work that we put in the previous weeks. If you hedged against it, it's a bonus. At the end of the day, we can see that we're threatening to make a third consecutive high on this green zone. One thing that I've noticed in a lot of the consolidations in the previous weeks is that they've been expanding into three highs, into three lows. And this is interesting because you have the three lows and you also have the three highs, and it's like a symmetrical triangle, except it's in reverse. And essentially, the other version that we've been seeing a lot of lately too, I want to point out, is running into this and then getting that. And I mentioned earlier as well, I do find that this is very similar to a movement that we've been seeing the week before, and it just changes a little bit, except the people will not change. Expect it to do what's familiar to them. And in this sequence, it always blows my mind to see how important that this comes up as center of attention, just to meet the equilibrium. But how it does it is really interesting, um, and how it puts the average pattern to the test. You know, how did we get to that from this? Well, it started with that, and then it led to this, and then it led to this, and this would happen third, it would seem. You know, the people that survive this would then get this. People that survive this would then get this. And what is this? This is a high with a higher high and a lower high, which is a head and shoulders. If you were just looking at it like that, you would think, oh yeah, I'm about to show you a head and shoulders, right? But then you could see that down here, we've got a low with a lower low and a higher low. Where it's like if I was to show it to you like this, it's like, oh, he's definitely about to show a head and shoulders. But it's the same thing. You know, I call this an all-in-one head and shoulders. Easy to understand. And then, you know, we went from all of those, right? Changing it, doing something like this. And so far so good on the first part of it, and then it carries on to the second part and it does that. You know, and it's the third drive. So it scrapped that with the aspiration of being able to complete a third drive. And then from the third drive, it'll be interested in doing the 3 consecutive lows into the 3 consecutive highs to create our triangle that we've been doing, expanding wedge. I don't know if we have that going on right now, but from the 3 highs into 3 lows, we then did something like this: 1, 2, 3 into 1, 2, and 3, where these two share a lot in common. The only thing that's different is this high fails as a failed head and shoulders, and this low fails as a failed inverse with 3 lows on the bottom and 3 highs on the top, just like we have here and there. And this reminds me of the typical 11 low zone. I just want to point out another fact for everyone. Look at how it formed in the morning. Okay, first off, everybody got a big jolt of, oh my goodness, hey, look at the markets running. It's doing this again for all these people. It's doing this again for all these people. You know, one of these big pushes, they think, right? And it's doing for the people right out of the gate, right? Like at the open. It's giving that allure, like that hint that it's trying to make that same kind of environment again. And look, by the time 9:38 rolls around and all the people are ready to be a part of it, what does it do for them? Well, it starts going sideways miserably for like a long period of time, you know, for 89 minutes, an hour and a half. And it just chops. But within that chop, what does it do? It throws out one of the most common public patterns that we've been seeing, especially even last week. Doesn't even matter if you're not familiar with how it is. Like look at this pattern right here. We see this one forming, and it's like, oh yeah, Okay, nice right shoulder. It's a little bit higher than the left and everything, but it ended up taking it down pretty severely, right? And go ahead and take a look at this real quick. Had that same kind of pattern there. So we did this, this, and then this. Same kind of idea here. The components are all the same, from the up to the down to the up to the down to the up to the up to the down to the up. Same thing in all of these situations here. So it's funny that it provided this pattern after having been so effective here. We can see it clearly, and then we can see it being so effective here, really, really clearly, right? With the high, oh, you can even see it in here, high, higher high, lower high, and look, it came all the way down like that. Like think about how many times this pattern multiplied itself before actually stopping. And it's like, is that effective? Oh yeah, it's effective. And at the end of the day, we got another one over here as well. And I mean, like it started another major dump last week where it was like, oh, the left shoulder, the high, and then the right shoulder, and then it dumped down, right? And like, how many times did it double itself? I'm not going to do it again, but many, right? And then the people get one this week. They're like, after analyzing it all weekend, and I can see the head and shoulders pattern is a very effective pattern. It brings it down many times over, and sorry that there something happened on the stream. But looks like the basically something in the middle of this triangle went wrong with the head and shoulders pattern essentially. And inside of that head and shoulders pattern, we can see like the first pattern nearly of the week, right? Because this is the open here, right? And you can see, how did it start for them? They're like, oh, I remember this pattern. It went low, lower low, and then higher low and leapt up. What does that look like, huh? That looks like our effective pattern that we saw last week. How it went down, except it's in reverse, right? You can see exactly the same kind of pattern here, going down as this pattern went up, like three highs, with the one in the middle going down lower. So essentially that happened, and that was our low, but that was pre-market. So options and stock traders, they don't really get part in that. There's not a lot of volume in that area, right? So it's interesting to see that when the people are finally able to trade, comes around the right shoulder, roughly 10:30, just an hour after the open. It eggs them on, right, and gives them just the green zone to a range that's clearly being respected. Clearly being respected. And it's funny too, because the people in the morning that look at that range, they'll be like, oh, I don't know if I want to trust that green zone because it didn't work very well, did it? It didn't get any response. Anybody that tried that green zone to begin with, what did they get? They didn't get very much, did they? They got they got as much as it went up, down. Why would it do that to them? And then all of a sudden, they have the audacity to make it work like that. And to make it work so well to a red zone that it's related to. And not only does it go from there once, but multiple times does it acknowledge the red zone, and multiple times it acknowledged the green zone, and built a node of volume. Like this is a representation of all the volume that we've done on the screen here. And you can see it's just a big chunk sitting inside of this big area here, right? Separated by an equal spike on the bottom, has an equal spike on the top. Centerpiece of attention, it would seem. And it just like as a mathematical phenomenon, I find it very, very strange that they made it the equal distance from the low to the high. This is now the 61. The green zone that was working so well seems like it was working even better now. But what's funny is the people that feel like they're finally ready to take it from one side to the next of this range, what's it done for them? Those that have decided to trade on the 61 haven't gotten much at all. They didn't get any of this kind of movement whatsoever. So that's the irony of it. The people are now ready. They see the value in trading back and forth in the range, but it's too late. It hasn't given them that opportunity. Of course, anybody in from a previous day's low doesn't have to take any risk or waste any energy trying to catch this pop. If all they're interested in is a move that it managed to do so many times in the morning, and they're fighting this hard for that move that was given how many times in the morning? I can't even see. There's too many. So, you know what I mean? But at the end of the day, it's not important if you count. But, the fact of the matter is the people are finally ready, and you can see they're all clumped into that middle, hoping that they can get that simple move to the other side of the range. It's a tough position, very tough. The people from the high are in a better position than the people trying to catch the green zone, and they're more prone to getting stopped out. One, because they're buying lower middle range. Two, they're buying above a VWAP. Three, they're buying in the middle node above the POC. Four, they're buying on top of how many green days of movement, which is not at the extreme anymore. So there's that extreme, and then there was another major extreme on the days before. Ironically, everybody that's been part of every single one of these major pullbacks, you can see the people that caught the major move or the dip here are safe, but anybody that tried to chase is not. And then again, here we've got more movement where people are safe. And in the future, we pulled back into that move heavily, but not as quite as much as we did the last time. However, anybody that tried to catch that pullback got a pullback and another pullback. And it's like it's just unsafe for the people of the trend, a little bit later in the future. It's so much easier just to continue holding, because that means if you're in from the bottom and you're focusing on trading against it, you don't have to worry about where to catch it here. Like, how many times would you have to try it just to get part of a continuation that you already had? And you risk being part of the next major pullback because you're not at the extreme anymore. You're in the middle of a different move, and in the middle of a different move. And it just keeps getting more unsafe and more unsafe and more unsafe for the major pullback that we're going to do one day, where it pulls back halfway into the move. Hopefully you're not trading halfway up into the move because you've been late so many times. So it's like, that's why I say from the bottom, it's very, very good to keep your stop at the extreme and trade against. And I can see that the market really favors the people that do this, because at the end of the day, the average individual is focused on taking a position and then selling it off. If you're interested in dragging your stop into profit at any given time, it can't be very far, because the market comes back so much that it will almost certainly knock you out. So, um, taking part of your position off, it becomes a necessary thing. You can't just like, a lot of people just get in and then sell it off, and then try and find a better place back in, and they always get higher than where they sold it off. And if you've caught the extreme, there's some value in thinking, hey, what is the value of retaining exposure to these extremes, and what can I do in order to make it safe to do so? Like, let's talk about it. For instance, let's say, for instance, you have the extreme, you know and you have the ability to make a hedge trade the exact same size as your core. What risk is there in carrying on the two positions? So, like, if you've got 10 shares going up, and you take the same amount of short position against it, there's very minimal risk that that can threaten you. Like, let's not even say the same amount. Let's say you take 80% against it. So you still have something going in the direction that you want to, but you've taken the majority of the risk off. 80% of all of the profit or loss that incurs on this position will now be void. Because if there is a risk and it ends up coming off, you get to make money on 80% of your position. If there's a risk and your position is actually, still the good one to go, you're actually still making 20% of your position. You're not actually losing much at all. You're losing your profit, but you're not losing You're just making 20%. You've offloaded the risk so much that if the risk is so big, you can make money on it, and you can piece that 80 off all the way down. But if you're wrong on the 80, you can actually you're still making 20% of your initial core position. So it's like, why would you give it up to just lose money if you're wrong? Doesn't make any sense. You have to hold yourself more accountable to watch two positions, but it doesn't seem to be a consideration of the average person. So it's interesting to me to see that the market moves in favor of people that catch the positions from the low, keep their stops at the extreme, and then move against it and trade against it and actually take profit in these ranges while everyone else is trying to buy their long trade back in here and they all get eaten up. When instead, you hold the long trade, never sell the long trade, and trade against it. Does it matter if you've taken profit here? Let's say you've taken 80 of your position, 80% of your position down. You go da 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 da, and you piece it off, so you've only got 20 left of that 80. Taken 2, 4, 6 off, and you've still got 20 left. Does it matter that you've actually taken profit here? Because if it matters if you go long there though, because that's just a straight loss if you lose money. But if you're just, oh my goodness, I've managed to take profit here. Now you wait through the consolidation. You don't have to fight the nitty gritty. You don't have a stop hovering around in this area that's like you're sweating beads about it breaking. But instead, you've just taken some profit off here. And, back in the day when I explained the 11 low zone, I would talk about how we would make a chop and then it would rally up and then it would chop at the high and we would dump off to like about a 78% retracement and start grinding. And what we would do is we'd create this like line right here. And it would be interesting because I would always make that line blue. Like it would always be like that, right? And and it's interesting to me because it would be like a 78-88% retracement and they would create this blue line and what they would do is come up and smack it and then fail again. And that would knock so many people out. And then when they got to it, they'd break it and actually get to this target. Because everybody that was trying to get to that target would get stopped by some sort of support line that was in the way. And it would test their integrity one more time or two more times. And it would get towards the end of the day again. And a lot of people would be dried out. You'd see the movement that happened at the end of it was a clear movement. And and this is the schematic for it basically. And the thing is this right here, this entry right here, this would be like a falling wedge or something like that. It would be something clear. It would be something clear, like a 188, something that everybody has, right? And you know what's funny? Is they would get everyone into it, right? They would get everyone in. It would be such a clear thing. And it would be like, oh yeah, everybody, Google pattern right here. Everybody can be a part of it. Now, what's funny is everyone would get a part of it. There would be so much volume, so many average individuals part of this move. But all of them be wiped out in this. Not a single person could freaking hold it. They're all just folding under the pressure of watching that $1,000 come back to 100 because they don't understand why. And then when they're offered, oh yeah, the 700 again, I just can't deal with it coming back to 100 again. They're out, guaranteed. And at the end of the day, this is always a better trade than here. This is all higher than here. Everybody was already in from here. Except, you want to know what's funny? Is the institution wanted everybody's trade. And they got it by making it tough for them, by making it tough for them. And the psychological ploy on one's mind, like imagine, this is a line of your profit and loss, and you're just watching it. Oh, it's going up. I'm so excited, and now I'm so depressed, and now I'm excited a little bit again, and it's all just feeling better. My emotions are coming back, and then they come down, and I'm just like, well, personally, it's like it wears people out. You think they're going to be trading here? No, they're going to try and quit as soon as they can. So and the thing is I think that the institutions refer to them just like I do, like they. And they're talking about everyone just like I'm talking about them right now. And the thing is they don't consider anybody's going to be considering what their plan is, how they're going to manage everybody out. Why don't they make the 61 attractive? You want to know how attractive the 61 was every single time that it pulled back in these areas? Like, look at this huge move right here. You want to know what came down? The 61. of the entire uptrend was the reversal point. So people in retrospect can go back and see that that was a huge move. And now let's look at this one here too. So this entire run up here, this one, a 61 basically. And so people in retrospect, they'll go back and they'll be like, "Oh, this worked so well last week. The head and shoulders worked so well last week. That's part of my strategy now." And it doesn't work. The 61 doesn't work. Not for the people that are late on it, at the end of the day. And not for the people that can't take profit on small areas. And I mean, like, you want to know what's funny? Is all of the mutual funds and all of the different firms and everything like that, there's an incredibly high likelihood that when they just randomly place their orders through without looking at the charts, they will land in this area. And they'll land in this area. And then towards the end of the day, it's very unlikely that they're going to be putting a lot of volume into it. But if we keep them around here for the times that they average, like they load up generally, the institutions can use those random orders as volume to accumulate positions in whatever direction they want to. So I'm like, it just reminds me of like herding the public into little nodes, basically. Call them the people of the node, and it's never a good thing to be a person of the node, because they don't have control. It's funny because they call this the POC, right? The level that has the highest volume. You think that the people have control in there? This is the point that they control you. Point of control. Not the point that you're in control. Who the hell's in control from this level? Nobody's had a good level for good profit from those levels. They've been returned back to so many times. Like if you initially shorted off of this red line, it's come back to you, but if you bought off of it, it's come back to you from roughly the same amount. How many times? And made that price wrong for people that have been bullish or bearish at it how many times in that area? It's just been a wrong price so many times. Unlike this price up here, where it's been very definitive. Unlike this price down here, which has been very definitive, where it's like there was one party that was right and one party that was wrong, and it respected and the people that were right accordingly. And it's like, well, now we can see everybody that went long on that 61 is being put to the test. All of them getting stopped out in one big batch, one big movement, and that's absolutely okay. At the end of the day, we can point out as well that we have a B point that's untested under here. Of course, any response to that is also a response directly to this range that it used before. Let's take a look at it. This is a range that basically built a node here. They had a POC just below the red zone, and it spent a relatively decent amount of time in that area. And we can see that we came back overnight to really respect that area, creating a inverse head and shoulders in it and playing out into the morning. Now, that area, which does have some volume from today still, because all of that falling wedge volume is contained within that area there. And now we have a new trend line as well. And in the morning, it's quite strange to me to see that there was quite the volume on top of this, or quite the consolidation, but there's no volume in that area. We've got a lot of volume in this, a lot of movement in this area, but yeah, not an incredible amount of volume. We're very close to the B point down below, of course, as well. The 88 is where the old 188 was, which is very. That purple bar was a 188 200 originally, on the day that it actually uh, was there. And now we can see, like, if I put that on, basically it outlines that 188 200. So the top of the purple is a 188, the bottom is a 200. And look at how it treated it. It smashed it from both sides so many times, right? Roughly spending this amount of time on the bottom and this amount of time on the top before it was done. And I mean, like, could this be a method of showing us that it likes to do this distance and this distance like that? It's a rudimentary analysis, sure. Like the one I was actually talking about it, you can look back in the stream. It was a lot more advanced, but still, just for, that's one way for it to make this movement, which is so simple, yet it doesn't have to be. Like the idea that there could be more that's understood than just that, and understanding that simplicity amongst all of that complexity is really important, because as we're analyzing the falling wedges and understanding that this isn't a consolidation and it's really difficult to be a part of, if you want to be in for that bullish reversal, it's like, hey, here we go, and then it's like, you better still want it. And then there you go. And then it's like, oh, but if you got that, we're going to put you to the test real hard. You must have been in from the area where it wasn't obviously reversing, because if you chased it or chased it, we don't respect you. So you have to be in from a very, 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 very extreme spot, or your stop has to be reflected from a very extreme spot in order to be able to survive that position and still make it safe to continue holding. So it's like, when I look at what a lot of people do, where they chase the market or they see green and they buy into it, the market, it's like, you better sell at the right spot or it's coming back for you inevitably. And I'm very much not going to try and fight that trend, right? It's, in my experience, the best way to go about it is to retain from the extreme at the long term and trade against it. And that's, basically uh, what the hedge funds are doing as well. And the market tailors that kind of trading strategy, like getting out and getting back in. Even anybody that caught anything good in the morning, the market has not given them anything better. Yet it's offered them so much risk in trying to obtain a position back that they already had from a worse price, and they're fighting for it. Imagine that. Very strange, isn't it? Now, another thing that I pointed out in the morning that we talked about was the 1, 2, and 3 highs into 1, 2, and we're here. We haven't made 3 lows yet, but we could. And if we do, what's interesting about that is these 2 highs right here, in many ways, have a lot in common. The movement that we're doing right now. Like, they could be the first two, like we had the first two here. Maybe appropriate. It is true, the last 2 lows that we did make that were significant were of exact same size as what we have right now. And these 2 highs, they actually might be a little bit clearer to the side. In many respects, that distance could be acknowledged from the upper side, as it was here as well. And it's like, the market has decided that anybody that valued this area at the 61 was put to an extreme test, and no no volume at that area was allowed to be profitable to this point. Yet it was an incredibly useful reversal point last week, which is interesting because it raises that topic of, hey, why would the average person decide the thing that the last week sorry, why would the average person decide that last week's successful patterns shouldn't work this week? And why would they set it up for failure almost? Almost like they were anticipating that the public would try and do the same thing that they pulled off last week. Because from what I can see, the institutions work very, very, very hard to make sure that the obvious runs that they're making aren't easily catchable by the public. Now, like even just think about the falling wedge that instantly destroys anybody that tries to be associated with it. You almost have to be comfortable with it making your entire pattern again against your position before it reverses. Now, a lot of people can't survive that, and I don't think you should try and do it either. But instead, when you capture an extreme that took, roughly all day, it's like 2 o'clock here, and it's in its reversal point just after 2, and then they find that moment where they can thread that needle and get everybody out of their way after it's been too tough for them. And then those that do have it get put to the test so severely. And anybody that wants a bit of that action after they've seen the pullback, after they try to catch the pullback, first pullback, they try to catch that, it doesn't end up holding. The other pullbacks that are with inside of it also didn't end up holding many times over. And then if you caught the pullback that made the other one fail, that too failed. And then that one failed. And then that one failed. But you could say it failed 1, 2, 3, maybe 4 times in that area. And unless you were looking at the market as you know, uh, like this is the way that this is that area right here. This is the morning so far. Buy, sell, sell, buy, sell, sell, buy, sell, sell, buy, sell, sell, buy, sell. Only just, I want that exposure. I want that exposure in that area. And then the whole thing gets put to the test. And on that test, there's B points down there and we hedge towards them, and then the rest is history. So it's like, well, that's what it takes to catch this move. And I mean, if you're not holding from the extreme, then you had to be put to the test. And if you weren't being put to the test, then it was being made hard for you to catch. And if you caught it, then you were put to the test again. And if you managed to pass the test, then you have the position. And why give it up? It was the move that was going to happen against that position so uncatchable that we had to give up the position. It's like that's another major question. Because I'm like, well, how could we make ourselves more effective in that environment? Does that become a consideration as well? Because it's like we know that there's certain facts in the environment. If we go against those facts, like, hey, okay, there's certain patterns in this environment that work better, certain patterns that don't, certain things that we see more. If we obstruct those things from happening, we're going to have a harder time, it would seem. So familiarizing ourselves with the facts of the situation and understanding exactly what's going on with that environment is the first step in having an understanding. And it's like once the market provides something where they've worked really really hard at making sure everyone's out of the way for it, right? And then they can make the market move really clearly for them, and everyone's gone, right? And it's for the institutions, they're moving it really well. You can see the 61s work really well, everything works really well. And then in like after everyone can see that that's the fact, they all flock in and the market gives them absolute trash nearly every time. And it's tragic because on the days where it's moving, it's literally been too hard for most people to even be there. And I can see that because if it's not busy making it difficult to catch the move, it's busy taking back the move that it just gave you. So how do you work with that environment? Well, that's why I say keep the low and hedge against it, because it's so much easier to catch the dips. We wake up this morning and we just have to hedge it. What did we do on Friday? It was all about just catching the morning high and holding it, because it was the greens. It was the gold zone and the red zone, and it was like, oh, don't be surprised if this range is used. It was the green zone, the red zone from over a year ago, and it responded with absolute precision. And it held all day. But anybody that was long from the low wasn't worried about getting rid of that short position so that they could buy a long trade higher than where they were in from. That doesn't make any sense. So you would keep your long trade, keep the short trade, and effectively, it doesn't matter if it comes 78% of the way. That's 78% that you can take on that short trade. 78% that you have as profit to be able to trim off while you're waiting for your long-term trade to flourish. Now, these big 78% pullbacks that happen on us, they're good to be in from. You don't want to wait for it to to finish this environment and get into that up then sideways area and not be in from the extreme, because you'll almost certainly be in on the next retracement. Literally. Like if you don't fight for that extreme and you're not in from that best point, the market will come back to catch you. And I'm like, well, every single time in the past month, this has been the case. So it would be like fighting against the grain. And I mean, one thing that I think is really important is because if people don't recognize this is happening, then they're part of the situation. But if you recognize what's happening, then you're not just part of it. Like if you look at Wyckoff's schematics for a consolidation, there's a complete understanding of how those consolidations can work. And you can be a part of it if you understand them. Just like you can be a part of these ones if you understand these ones. But the thing that's interesting is now the market makes changes more frequently than it ever has before. So it's not about just opening the textbook and figuring out how it's moved like this in the past, because it may not have moved like this in the past. Because we make more movements now than we ever have in the past. We make more points now than we ever have in the past. And there can be more patterns and more volume for those patterns. And it's only just becoming more so that way. But what I can see typically in the morning when we made that huge run right out of the get go, it was interesting because a lot of human beings on a Monday morning are in that wait and see phase where they're not effectively ready to go and part of a huge unanimous move, but rather uh, not not quite in the groove of it. I don't think that they were part of that move. The majority of them. I think that the majority of the people were part of that node, and we can see that. You know, the volume just distributed very well within that node or within that range. And what that tells me is that the average person is comfortable with being volume in that area. And it's very interesting because that's the scale that I think they're being used. And it can take a long time before it offers something very clear and concise. And the longer it takes and the more grindier it takes, lately it has meant that there has been something more important on the other side of it. Not always can we expect that, no, but lately it has been that those difficult, grindy environments that continuously seem to make new lows are the best long trades, but from particular areas. You know, anybody that tries to go long while the pattern is forming gets absolutely wrecked. But anybody that can tell exactly when that move should formulate at the bottom because of clear technical levels that are all confluencing at a same in a particular area, that's huge. But this entire 78% pullback like environment, I was explaining this before. This is what we had on the 11 low zone territory on the daily lows, where um, we grinded that 78% retracement, popped out of it, took the pop back, and then finally the people that could handle that were then exposed to the move that mattered. And of course, anybody that was holding from long any day prior to today and focused on hedging in the morning, effectively, there should be no Like unless you shorted in pre-market, there should be no hedge trade that is at a loss. And basically, having trimmed off most of that hedge trade, you're in a position where you can wait for the long trade to become profitable again. And it's not one of those situations where I think it's wise to reverse the hedge trade and trade it up like I did the other day either. One of those days where you want to keep it. It's relatively hands off, kind of like on Friday. Once you capture what you need, it's important to maintain the integrity to withstand any kind of pullback on that position. Because what they're trying to do is get your position, not from the same price that you have it, but it means that you don't have the ability to sell it, which means that you don't have the ability to obstruct bullish movement in a negative way. Like it's completely gone. Not unless you become a short seller. But if they take your position from you, if they take your position, then you can't sell it. And that means that you can't sell it at the B point, you can't sell it at the node, can't sell it at the next barrier at all. That barrier becomes that much easier to break without you in it. If you recognize the barrier as well, then you may be interested in selling at it, and that's a problem for anyone that expects to break it, no? And if everyone's target is only 20 points out of the gate, that's going to be a problem. And I think it's within human nature now, after all these major pullbacks, everybody's so timid about holding that they sell most of their position as soon as it gets off the ground, and it's normal. I think that that's a human thing. We have to like train out of it, just like many other things that are worth doing in finance and in trading. We're not born with them. We're born with the qualities that hurt. We have to train out of them. It would seem because nobody's born with the you know knowledge of the patterns or nothing like that, right? So you have to learn them one way or the other, either by experiencing them or being taught them. And right now, we're making a third consecutive low, just as we did on the highs, but not a big one like we did before. The B point just got grazed as well, the only green dash line that there is. course, the B point is getting hit as well. So the red zone used to be the high of an old range. Essentially, like we can see here, this is not, it's not really old, actually. What I question is whether or not we're actually going to use the same kind of angle. Like, hold on, let me pull this angle over here. Quite actually on that. I find that very strange that it managed to test it from both sides. But sometimes we can see that same angle used at the very least in the event that it is trying to make a similar consolidation in that area. Now, of course, when it was in that area, it managed to move out of it quite significantly. Like it took that same distance out of the bottom, then it moved out of the red zone and put it outside of the green zone, a little bit more even. And another thing that we could be expecting as well is like, how we had 3 consecutive lows on our short term right now. How about the ones that we had there before? Are they contained within the same general area as we saw the last time? It looks like they were, very interestingly now. So this one, very similar. I just couldn't help but notice. Does not mean it will have the same result. In fact, it is the third time that it's managed to do this. It's not incredibly clear, so I wouldn't expect many people to remember it or find it, but at the end of the day, it is choosing to use those as the confines of this consolidation. And one thing that it could mean is that by the tip, it will be over. But the people of the 61 are put in a really tough position. It reminds me of how many times it had to test this line before it was done with it. First off, it was formed, and then it came and tested it like 6 times or what. Here we are, in a relatively different environment. I also can't help but notice that we've made from the high, it made 1, 2, 3, 4, and then 5 down, right? But the highs that it made were relatively similar. The downwards movements that it made, they were all relatively the same size. Like, is it not true that the first wave and the second wave, same size? Like that middle area, that's wave one, wave three. That's wave one. That's wave two. They're all relatively the same. Anyways, that's something that we may see again in the future. You want to know what's funny? Is it came up on 1, 2, 3, 4, 5. Anybody that tried 1, 2, 3, 4, 5 was in a tough spot, no? Is it not true that they showed the same pattern? Even with the consolidations roughly at the same level, and it decided to do the exact opposite result. The falling wedge starting to play out at the time at which it played out before, and we can go ahead and put this over top of the other environment there too, because those were the 3 lows of the morning, which is ironic because it did have a 1, 2, and 3 reversal, but this low here actually really made it an interesting one if you really look at it, because in this one here, oh, that's really weird. No way. Okay, alright, that's really weird. I saw this before too. So, did you know that this point here and this point here is point 2 and 3, right? So, you would think that in the next one, the big distance would be 2 and 3, but it's not. Oh, hold on. This level, 2, and this level, 3, was 1 and 2. This level 1 and this level 2 became the end. They were the beginning originally. All the same distances, the same confines, same pattern, but laid out differently. Makes me wonder what on earth is going on with this first one. Oh yeah, this one had a fake out. The other ones didn't have fake outs. This one was nasty. This one. Really, it was. And after faking out these people, it faked out anybody that got part in that. Like, unless you had this bit down here, and you valued it so much that you were endured these pullbacks and kept it. The only way that you could keep that you were exposed to the next major good thing. So I'm like, why is that the case for those that have the best price to have had to endure those things in order to keep the best price? Should I consider enduring them in the future? You know, it becomes a really like question of logic, right? It's like, is it necessary to endure these things to be part of this pattern? It's another question, right? It's all difficult, but the more you understand it, the easier it becomes. And especially, and these are environments that are just inherently difficult that lead to a much profit though. Like every single time that we can see there is something of value, it's given, but then people are put to the test. Why again? Here, anybody that caught the pullback that actually mattered. First off, if they were trying here, they were met with that. Then they had to want to do it again and find some other value in it second time round to be able to get not just this, but merely double. And what it did give, it gave quickly, and you better have taken profit, or it was, it came nearly all the way back, right? And that's not very nice, right? Puts the people under a lot of stress. You could say, oh, the people that were trying in there might think twice if they were going through that whole experience, right? And it's like you can see the same thing happen for the people down here. Choppiness that you had to find value in, and if you tried to take it anywhere but that hard area, you're exposed to the pullback. And they'll keep pulling back if they see that people are going to be in the way. That's the irony. Now, with a pattern that we've seen 3 times form, I would suspect there's going to be something incredibly different with its ability to play out. Skepticism, in my opinion, is a major standpoint. Yeah, I just can't help but notice another thing is as well in here. We did have an inverse head and shoulders, right? And like that inverse head and shoulders failed first, but it was part of an inverse head and shoulders that worked. Like undeniably, the people that got to this pattern had to endure this first. Not very nice, is it? Right? At the end of the day, it's been like, okay, low, lower low, and higher low really can make it work out. People that tried that low, lower low, higher low were offered this. That's terrible. That's exact opposite of what it gave a minute later. It's all at the same level. But except the people that found that pattern attractive first didn't get it. And they were like, you want to try that again? Essentially with this? They had to have the guts to go in again on the same pattern that just failed them. That's tough. So, especially when people are holding themselves accountable, it's easier just to not be involved with it, right? So another thing here is we've just tested the green zone. I can't help but notice we're putting a hell of a node on it. Uh, Scrolling out a bit, you can see that this matches the pre-market node that we had here before, which is really intriguing because it had a confine of this amount, it was stuck in that area. It was basically that zone. We were looking at this on Friday, and I'll show you what's up with this one. You just look at these levels. This was an original channel, basically, and throughout the overnight session, it not only made it even on one side to the next, but it managed to come down specifically to a 261, and then it returned right back to the bar. You can see that that move was made there. That kind of plunge, that kind of movement. I think that that movement is going to be something that we're going to see a lot more of, something that's a little bit more familiar. Sure. Hold on a second. This chart just presented me with interesting. This movement here, down, up, and down. Very intriguing to me. What that means, could be interested in Wyckoff. Phase A. It's on an angle though, but everything's on an angle here. So I'm like, okay, we'll just with it for a second here. But any bells if we side by side. Like this kind of move where effectively, or sorry, now that's the strange part about this is upside down, I suppose. If it starts with that preliminary support here, the circle, and it comes down, be this move, it comes up, be this move, then down again, which would be that move. That's phase A completed. It does have a little bit of a right shoulder vibe to it. If it makes a little bit of a dip, in fact, if it makes that exact same movement, definitely consideration. I can't help but notice that this movement here, it's very similar to the movement that we've done prior to this. Much as I wouldn't be too opinionative with it in around this middle area, though, of course. Another move that we just made was a move back to the 61 from the underside. And I cannot help but notice that all of the node that we had in here, all of the volume that we had in here, basically just came down and hit the high that volume as a support and responded to it. And in the morning, we put a bunch of volume in here. So we had a node like this at the bottom, and then one in the middle. So it's basically just fallen to that to that bottom one, and come back to test this one. And I can see that along its journey, it's managed to use the gold zone so many times, and respond to it many times on the short term as it did the long term. This is an area where, if we remember our head and shoulders from the morning, and we consider this whole area the consolidation, this area is a spike. Well, putting a consolidation on the movement that we've already consolidated, that could make a right shoulder. The a couple weird ways that it could do it. First off, if it makes this into an inverse head and shoulders, that's one way that it could try and get up. I wouldn't be surprised, because look, it has a head and shoulders on the left hand side as well. So making it similar on both sides is an option. After all, what it's saying is that when it's inside of this area, it's comfortable with making that kind of pattern. And are we surprised if it chooses to make it on the other side? That becomes an interesting question. Another major thing as well is this area in the middle was doubled on both sides. And can we see anything of the sort again in the future? And was this distance used? Straight up, it was. So, like, not at the same levels like you would think, but it was just simply used, like this one was. And what happened to our node in the middle now? How are people ever going to recognize where the volume is displaced when we've overtracked and stepped on top of everything? This is the distance that we initially used when we went from here to here. Morning. Could we be interested in doing it again? Another very intriguing question. And I just drew that on there, and I was like, okay, how I started talking about this is, what about the distance on either side of this green zone and red zone here? I can turn it up a little bit. This one and this one are directly related. So in the event that it made that S wave again, I mean that it's already made in the past, would we be interested in making the distance from the bottom of the red zone to the top of the red zone? So not from the outside to the outside like every human being in the world would ever draw it, but the other way. They wouldn't draw it this way. Because everybody would think that because they've been shown an equal distance on both sides of the triangle, that was for them. Because what they get is typically different, ironically, than what they've seen and what they've prepared for. But they try to adapt with what the market is doing and try to go in line with it rather than anticipating its intentions. And I think that in this environment, if we were to create this, you want to know what would happen? It would be a head and shoulders to an inverse head and shoulders in one big move. Take a look at this pattern here. At the end of the day, it would start from a high, have a higher high and a lower high. It would end with a low, with a lower low and a higher low. It would end up being centralized towards the middle. It would end up not really moving for most of the people that are associated with it, and consolidating perfectly around the range. Very curious I am about this. Something of a consideration for sure. And what does it mean? 2 tests of the 50 from either side. And the patterns that could be amongst that, like, I guess you could call it the macro movement of the entire situation, and what happens on the short term could really lead into that. Like, first off, not true that we went from an M into a W. You can even see it's like really trying to push that out there on the short term too. It was like M into W and tried to do this W as well. That is a B point. Um, so that's why I mentioned that right there, the M into a W. And this is another pattern where essentially along that level here, it's basically doing nothing. This is a great way to consolidate because it hits 1, 2, 3, 4, 5, 6 times at the same level before it does anything. And it's very even, both sides, like incredibly even. I just bring it over just to show that I'm working off of a trace of this market here and or this pattern right here. And effectively, you know what the best thing about this is done right now. And it doesn't offer much movement while you're inside of it, but this is how it has moved at the 61, which actually blows my mind because when I was drawing that there and saying that it goes across the same level 6 times, well, I think that level in this case that gets hit so many times, that's 61 right there. This level right here. Now we must remember that the green zone is related to the red zone. However, it hasn't been working for the people so far like that. Doesn't mean it won't in the and it doesn't mean that there is not going to be a test of integrity at some point as well. I do think that any long trades that are captured are unsafe if their stops are kept above this bar, as it could get a test at any given time before. But it doesn't necessarily have to, it just means you don't want to drag your stop in its path of doing so. Taking off enough profit to be able to endure that kind of pullback is necessary while you have it. But hedging, not incredibly necessary. But like every other major that we've seen, um, it comes with a lot of chop beforehand. There was only one of the major moves that really didn't chop too much before. That was the day that I alerted everyone not miss them. Another thing that I find very intriguing is the distance between 61 and the red zone on the high to low, matching with its red zone. Very attractive. Ultimately, I mean, it's very attractive to get exposure early, but it's definitely not attractive to be exposed in an environment that suggests there could be many snapbacks before the continuation to the obvious target. But it's just basically the best way to go about it is to be in from the obvious extreme and then trade against it rather than trying to settle for the middle area, which is basically what they're trying to get people to do right now. And that's why the 61 has otherwise just amounted to accumulating volume rather than actually anywhere for anyone that's associated with it. And the majority of the public being that they could only buy, and at least the majority of them, being put into a situation where, you know, this is tough on those that are buying. I mean, it's one more likelihood to get out of the way, and ultimately they can become an accumulation for a piece off in the red zone. But if there's people willing to give their shares up in this area, then try and get them. And that's something that I would say would be in line with the composite man theory idea that it's working against the public essentially to accumulate off of them. The accumulation, it's just because I think that it's a little bit more obvious nowadays that the people that are working against the public that are the teams. Uh, they need liquidity, and as so long as the public's willing to give it, I mean, take it. That's what happens when we go here. You want to know one thing that happens when we sit in an area like art grows right here, and it provides volume, this much volume. But is this how much volume they need to get things going? Becomes after all the movement that we've seen today's session since the 6 o'clock pre-market consolidation, it's all been around this level now. This level holds the level that has the most volume as out of any of the other levels that were really associated with it with today. I don't really want to consider the 5 o'clock volume as much, but sorry, the 2 o'clock volume. 5 o'clock volume can stay because that's the volume. Like Q's not going to have 2 o'clock volume necessarily. So their our POC is going to be here, and I think that we're going to try and jump to the other POC. Going to be looking like our 61 right up there at that a little bit higher even. Okay, so that's an interesting point too. So we have been seeing that shoulders have been a little lopsided last week, and if it is in this case, it's not going to surprise me. I mean, take this one for instance. What's intriguing about it being lopsided is that there's no question that it will become, you know, that it would become a head and shoulders. Because the problem with making a regular inverse head and shoulders nowadays is that it can make a regular head and shoulders reverse. But when it let's keep that on. When it makes this though, makes it significantly harder to form that head and shoulders out of it if it makes another advancement. Suppose you could do that. We shall see. The green zone is related to the red zone, and the volume acquired in the green zone is subject to stuff in the red. And it's insane how much time it's taken to get, or how much time we've taken on the green zone itself. Like for instance, remember when I was showing this distance that we're using here is similar size to the distance we have now, and I don't know what else is similar. Is this the time that it's taken to do that? It's longer Really? That's interesting. So I mean, usually, I mean, when we see consolidations of similar size, it's acceptable to assume that they are uh, similar not only in size but in time, especially if they're associated with the same area, which in this case they are. Ironically, this is associated with the middle of the range. This is associated with the extreme of the range. It's better when this consolidation here is actually on the opposing side altogether. And it may be going for that ultimately, but that would require a consolidation of similar size on the upper side. And I think each consolidation of this size that we do, we lose a significant amount of market participants. It's just literally doesn't, like, you could be the best trader in the world. The only thing that you can get out of this area, the only thing that you have got it is 68 points at the best, which is not bad. But at the end of the day, that is the biggest move that this consolidation has ever offered. And the majority of the moves are far from 68 points if you really get down to it. They're really not that big at all. The average move, I would say it would be that this one that we're always seeing here. Uh, how many times have we seen this move uh, out there? It's out there. How many times did it even just happen in here? It happened a few times in there. Happened in there, and we even pulled back. I find that suspiciously particular. Did again. It's like it did that pattern twice there. Hold on a second. Sorry, that just gave me kind of deja vu to what I was doing with this here in this area down here. So I can see that between these two areas, it is similar in the sense that it actually made a new high between them. And this area and this area, it is similar that it actually made a new high in between. And that is strange, but it is a fact. So I consider it. And the more considerations there are, the more understanding we could potentially have. And the understanding in this case is directly at the area that they have wanted the most amount of volume at, for whatever good reason. There has been the most amount of volume here. Now, in the morning, they made it clear that the volume off of this level was related to the volume in the red zone. Ironically, not something that they started today, but something that they continued off of another day, which is a fact. Everything I just said was a fact, not my opinion at all. This range was not drawn today, it was drawn another day. And it was drawn another day because it did that within it. It went from the green zone to the red zone at some point in that range at some point in the past. Now it came back and did it again today, but it didn't only do it today. Didn't only do it again. What it did was is it loved this range so much. What it did was is it went exactly this distance out the bottom, and exactly that distance through the middle, and exactly that distance out the top. But you can see that that distance that it went out the bottom was from the green zone out and from the red zone inside, which is intriguing. Brings me back to my um, previous analysis of it, trying to make a little bit of a distance the high of the red, but it wouldn't be exactly the same distance. That could take some time, of course. I mean, how much time did it take to ultimately complete the last S wave? Like, I mean, we did have this one here, and that took roughly two consolidations, a bit more than that even. Suspicious that that is how much distance that we've had there. How much we have here? Okay, okay, okay. All right, so that distance that we can see there, what I find strange about that is that we've tested it like this. I'm like, what is that? I'm like, why is it here, but in reverse? Why can't I fit those 2 points on top like I can fit the 2 points here? And they come after this. Could it be related with a move of similar size after its completion? Like, I mean, after all, it's done this move. If it did it again, if it did it again, it would be this distance here. on top of the red zone. Exactly. I'm like, yeah, kind of looks like it wants to do that. So after all, it's an abstract analytical method, but it's based off of facts, which is interesting. Like it's a fact that it moved that much. It's a fact that it had a little bit of an ending, and it did it here too. It's very strange. I noticed that it did it on the end here a little bit as well. So it's showing up again almost. The irony of it is it looks like by the end of it, it will be a triangle regardless, because when it hits these points, it will be interested in coming back nearly to where it is now, like it did before, but just again. So doesn't mean give up the hedge trade. It means that the hedge trade at the high, let's take a look at this distance here real quick one more time. That distance right there, you know what it reminds me of? The distance that we have up here. And you want to know what that reminds me of? Is the distance that it has out of the bottom on the other side. Literally. This distance on both sides. And why do I say triangle? Well, because it's converging into a smaller and smaller distance until we get into a tip, which the tip looks like it's going to be right in the middle of the consolidation. But it's not making it easy for anyone. Like I said, it could pop down to this gold bar at any time and try and steal your position. And that's just nasty. So it's good to like, all right, so let's say for instance you're like, "Oh, it's absolutely terrible." Well, it is. And God forbid you're in a consolidation another time from now and you don't recognize these things. Cuz they could mean, "Hey, oh geez, it's like, this, keep getting, slammed with some sort of like weird thing happening every time you take a pattern." And it's like, "Oh, that pattern is in an environment that could otherwise be recognized. It could be necessarily the part of an equal sized consolidation. Like we've made other consolidations of this size in the past two, three, other, four other times, and they've all ended in a very particular way that we've saw just now. And what it insinuates is that we could be trying to find that like thread the needle moment here, where the largest part of an S wave is the middle move every time, and that's the move it is trying to formulate right now. And of course, anybody that's part of that move can make it safe to continue being part of it by taking some off, by securing a stop. And if you know it's not safe to put your stop above that gold bar, that means that a lot of your profit is kind of hanging out there. And if that's for the short-term traders that decided to take a risk on this falling wedge, that is, of course. And at the end of the day, the falling wedge, you know, being that it's not at an extreme, it's been a easy thing to make a right shoulder out of. And we did kind of make that same move as we did before, except it's not leading to a breakout like it did before. It's still chopping. And there's about to be the change of the hour too. We could consider that a controversial hour change, I would say, as well, where we could expect that the volatility should increase towards the end of the day. And I would suspect that this consolidation is the nail in the coffin for a lot of traders that think it will be like this for the rest of the day. But if you look back in every other day, the consolidations that we've had that led up to the end of the day have actually led to positions that have held for longer than the ones at the beginning of the day in some cases. They've been easier. They've offered more quicker almost. And like quicker is not a part of the equation, but it's not even something that you should go for. It has quickly takes. It's an interesting word because we consider doing it right at the beginning of everything, and then quickly kind of throws an axe at that. It's like rivaling the doing it right thing, because quickly um, does not mean thoroughly. Thoroughly typically is what you want to be. You want to be thorough. You want to be understanding, and sometimes that could take time. And the quicker that you are at finding that understanding, the quicker that you can act on it. And trying to volume there. It looks like I'll see. Are we interested in making that distance out the top of the red zone and returning back to it just to make one big happy triangle? I'll tell you one thing. When we get back up to the 50% of this entire retracement, it will have done this, right? I'll show you one thing. It went like that, down to here, right? And then we saw it again here in a weird way. It wasn't exactly the same thing, was it now? It went this and then came down like that. And you saw it was quicker on one side than it was the other. But it still ultimately had the same components. The largest part of the move was the middle, and everything came back to an equilibrium. They're relatively centralized, and they both share that as well. And now this one, it's taken longer than anything. And could it be that it wants to offer more because of it? An interesting question. Because why take longer? What happens when we take longer? Let's talk about the facts of what happens when we take longer. Well, momentum changes when we take longer. Now you can tell that the 1 minute momentum has gyrated so many times. It must not be because of this momentum that it's going to run, is it now? Because it's moved so many times. How could the indication be from here? It must be developing a larger, longer term uh, divergence. And we'll take a look at that on another chart too. Um, you know what, actually? Perfect. So, hourly, um, sorry, we'll start at actually the 15 minute. So, we can see ultimately that the 15 minute is chopping sideways. We've been at this point for a long time. Thursday we were there, and we were even before that. The overall picture is that it's made an inverse head and shoulders on the longer term time frame, um, and it's tried to play out multiple times. But ultimately, the way that it's presented this node is that we've actually been in here, and we've been chopping and chopping and chopping and chopping on that node. And effectively, what that looks like in terms of momentum, having went sideways for so long, we can see that it's given multiple 15-minute gyrations. The current short term, it's managing to look very similar to the price. You can see that exact same kind of like shape that it's doing in the price as well as the momentum. So very centralized within both of them. You can see that there's a range on that, and it's right in the middle. And it's right in the middle of all of the ranges when it comes to the time frames, right? Okay, so let's take a look at 30 minute. 30 minute, it's not much different, but we have a POC right in the middle of the entire range. We've also got a little bit of centralization still there. Hourly. The hourly is an interesting one. You can see that throughout the entire hourly, we've been moving sideways, right? What's the momentum been doing though? Well, I can see that it started off here, and has it ever seen that spot again? No, it's never seen that spot again. What spot was that? That was the beginning of the consolidation at that time, right there, where it made that low. That's a fact. And when we made that low, the price continued to go down, but the momentum did everything just to not do that. to not go down. So what is that saying? Is that saying that throughout the time that we're going sideways here, we've been developing momentum, and that the more that we spend sideways here, the more it has ultimately affected momentum positively? And perhaps because we've been spending so much time here, it is necessary that we needed more momentum to leave here. And until we have the necessary momentum, we will not leave here. So it's clearly not on this time frame either that it's actually going to reverse on. Let's take a look at the 2 hour. At the end of the day, you can see it's even smaller, shorter term. Not shorter term. It's a even smaller area of analysis. We're just looking at this entire consolidation down here now. We can see the entire time it's been moving up. Let's go ahead and look at the 4 hour. We can see now that it's even clear that, it's like unarguably we've been moving up on all the different um, movements, or all the different gyrations, and this one also being uh, building. And then we get to movements like the daily, where it hasn't necessarily been showing its incredible development yet, but we have seen that. Actually, we can look at the 12 hour. We can see that that 12 hour has been like everything that we've been doing inside of that area has been developing into a bullish divergence, where the sideways movement and downwards movement has ultimately affected 12-hour positively. And how much downwards movement would we need to make, or how much time would we have to spend going sideways to untwist what we've done here? To un it's taken how many of these 12-hour candles? 15 of the 12-hour candles? So like that's a lot. At the end of the day, we have to be mindful of the fact that momentum is having a positive impact while we're consolidating here. And we can see that it's not on the 1 minute, it's not on the 15 minute, it's not on the half an hour. They're all moving with the market. What is changing the entire time? Well, the 12 hour is. The daily has just started to actually show histogram divergence. Everything's been pulled up really heavily. Why such a strong pull up when it hasn't really done any kind of strong pull up to make the averages pull up like this yet? It's just basically fluttered off the low. And with what we have here, we have 1, 2, and 3 lows, and it's managed to come back to the first of the three. We'll take a look at this as well after. The time that it takes to get there has not been really much of a consideration, but it could be similar to the time that it's taken in other cases, of course. Now, of course, this is a consolidation that's taken more time than any other consolidation in the recent past. And I suppose one consolidation that I find it somewhat similar to could be this one, maybe. A bit more than the last one, but not a whole lot. Take a look at the other indexes. They're kind of trying to pull off the same thing. The Dow looks like it's interested in getting back to its 61, which is going to be EOC right there. I find that kind of intriguing. And the 61 on the SPY is not really at the POC, but a bit higher. You know what could be appropriate on the SPY is a inverse head and shoulders to head and shoulders. Intriguing how that's apparent on the SPY, but the Dow, they actually have a shoulder on top. It's suggestive that the Dow is actually going to run a little bit more. Kind of interesting. And then there's the Nasdaq, which will run its particular amount. That's it. Wow, the imbalance from a visual perspective is not far. That's fine though. I think we can fit a lot of action into this last little bit here. Funny enough, they're trying to find a spot where the people are out of the way for the end of the day. Just a matter of time. Because it gets to the point where it's like the people that are so focused on making sure that they have exposure in a specific direction because they know that it's going to get to the red zone. Everybody else just finds it difficult because it's mindlessly chopping in what seems like an area that they're unfamiliar with. And that's, I mean, this is what it takes to get out of the range. And you want to know what's funny? You can look over and see how easy it was to get from the green zone to red zone at the beginning of the day. But maybe it's not just getting to the red zone, but through it. Maybe they have a little bit of a retracement, sure, from the red zone. Maybe it's a little even for a little while. Then maybe they continue with all the accumulation they've done. But the thing that's interesting about the institutions, the entities with all that exposure, they have the ability to move the market in both directions, not just one. And they've gotten to the point where they can make the market move in both directions for a particular amount of time so that they can create a pattern like a head and shoulders and get everyone to take a stab at it. And they become volume in the node. And it just decides to do nothing but make another head and shoulders at the same spot that it made an inverse. And I'm like, well, what's it doing for the people here? Because the head and shoulders pattern sure is not playing out, managing to just go sideways across one specific level. And when we see those like tester orders come through and they're like, "Oh yeah, we're going to push it up and see how much the market responds." And then they get such a nasty big sell-off right after because everyone's just taking their $30 profits. It's disgusting. Got to make sure that we get rid of that so that we can actually get to the big numbers, and that's what they want to make sure the people aren't there for. Because if they also give them, here's the small range, trade back and forth between the green zone, just the green zone, like the high of the green zone and the low of the green zone. That's the node right now. And you can see the POC, it's making a node around the green zone and the green zone only. And I mean, like, well, the people that are trying to take a stab from back and forth in that range, they're ultimately, no matter where they buy and sell, they're adding volume to the green zone. And when they ran away from them there for a second, it's like we could see how much it just bled back into it. I think they're going to actually try again. Each time that they try, there's less and less people in the way. The people don't have the integrity like the institutions do. Because the people don't have any control, but the institutions do. So it's like, well, they're going to go to the end of the day no matter what. And they can see the volume thinning out as it goes on. If there's a big clump of stops just outside the range, like it's typical that it will gravitate towards it and snatch it before actually continuing. You have to watch out for that. And what I like to call this is the 11 low zone because the people that try to take it, no matter if it's not actually 11 lows, it'll feel like it is. It might actually only be like 7. It used to actually, when I counted them, on average, it was actually only like 7, but still, if you're trying every single trend break that there has been, it could be quite tough. Now, however, if you took the falling wedge, you're still in. If you kept your stop beneath the gold bar, you're still in, you know? And if you're in from previous days, of course you're still in. And what I call this not only the 11 low zone, but the show, because it's like those that have taken that clear trade at the beginning and chose to hold through the test of integrity, they get to watch the show. And really, I mean, if you've taken off profit on a hedge just before the show begins, you get to see everyone stammering together trying to catch a long trade when it's just so difficult. And it showed them it was so easy from the red zone and green zone at from 9:30 to 10. Yet it gave everybody the exact opposite of that easiness. It's not like it went the other direction, it just gave them nothing. So a lot of people fold when it comes to the when it comes to the sideways movement, because it's like, oh, with that much movement out of the bottom of the green zone, it must be trying to make the same distance on either side. Well, guess what? It didn't make the same distance on either side. It made a move with absolute precision to another range, which is a red zone. So what it showed me is that it recognized the fact that it traded in this area before, and it put a volume node in there, and it came back to step on it, above making it even on either side. To acknowledge something that's already drawn there just on this chart. Nothing that's visible on this chart. There's no particular reason why it wouldn't want to go even on both sides if you look at it from this perspective. But if you understand that there is a range here, and there's a range here, and there's a range here, makes it very, very intriguing. This range up top is something that I find very likely to get used in the future. As we can see, We're moving towards the target. They're threading the needle. Like I said, everybody was slow enough. They chopped out of their position. This is what they do not get if they folded. At the end of the day, like I said, if you're still in from the falling wedge, if you're still in from a previous day, you're part of this. But if it chopped you out, then it chopped you out. And you can use that in the future to not get chopped out. Think this is part of the process, because if it's part of the process, it's so much easier to endure. Now, I'll tell you one thing. This blue line, gotta watch out for this crap. This kind of environment, okay? We could even do the whole thing again actually. But regardless, that's my least consideration, honestly. What I say is do not drag any long trade stops above this level, or you'll lose your position almost certainly. But it's not quite safe to trade back towards it yet, though. But in the future, it could be just like that one. Why is it not safe? Well, unless you like to trade underneath the halfway mark to expect it to continue going down, it's not really that attractive. Because, like, think about it. It's not only it hasn't made it back to the middle yet, it hasn't even made it to the 50 yet. It's under the middle. So if you're trying to buy low, sell high, buy low, like, this isn't even middle yet, and you're already trying to jump the gun on selling when we're not even halfway through the range. We're not even at the 61. We're not even at the red zone. Depends. If you can take as small of a movement as that offered right there, then that's fine. But at the end of the day, you can see the risk in being associated with it, because it's not very nice to the people that are part of it, is it now? So that's my point. I'm like, yeah, the thing is it just showed us in the morning that the person that trade just like this back to the blue line can have that trade and it could be easy for them. Well, it works differently now. Now it's like when we get to that distance that I specified out of the top, it may be interested in coming back to the blue line, which is absolutely fine. Under no circumstances do we allow returning to the blue line to harm us, or take our positions from us. And when it becomes obvious, it could turn into something we could actually profit on. But, it's not worth taking a small trade if it's going to offer risk that's not appealing. Like, how much risk do you have to take on in order to get exposure back to that blue line from here? What, are you going to go for how much you're going to risk? Like a 50-50? Like I'm going to try and make 10 points, but I'm also going to lose 10 points or something like that? Like, it doesn't seem like very good odds yet. But if it was a little bit wider, if it was maybe the 61 or something, it could be attractive. Now, I'll tell you one thing. We just responded to the 50. There used to be a node here today, and there's only a node here because, ironically, there used to be a gap there. Originally, that gray zone that we just ran into used to be a gap, and this morning they put a node there. So it like filled in the gap in a weird way. Like it respected it almost. But it doesn't have to just be one test of the blue line as well. It can be multiple. Like before, we had one test. That's the thing that can change. It could be multiple tests. And also, it could be a little cheeky about not getting all the way there because it's already shown us that once here. The last time, it was pretty seamless. I mean, like, few points left. See, like, why would it not want to do that like it did before, right? There is the blue line. So essentially, there is a small B point that's right below the blue line as well. So it's not really wise to keep your stops above it either. The 50% just had a retracement, and essentially, it really puts a lot of emphasis on the entire support line here. Go ahead and draw that in. Go ahead and turn this one down. Just to take the emphasis off of the previous levels, yet you can still see in retrospect how they worked in similar environments. Because was it not true that on our last uptrend it had a blue line just like that one, and it also came down to test it? And is it not true that that blue line was facing the same direction as the yellow one? And we have that exact same situation here. Hold on a second. This is interesting. When we pulled down, we had a triangle, a circle, and a triangle. Do we not have that now? Triangle, circle, triangle. What's the difference in the smaller version that we have there to what we have now? Or am I tripping? At the end of the day, it's very similar in a lot of ways. The separation of the consolidation by the triangle on the bottom and on the top. And the only thing that comes to mind is it not true that this spike out of the bottom and the spike out of the top amounted to it making a 78% retracement? We have anything but a 78% retracement now and anything but a major move. It's interesting that we can go so far into creating something similar as we did before, yet there's so many differences. Like one major difference is the fact that every move associated with this smaller area is just that, smaller than this one. And as we've made this high, it has undoubtedly created what is a triangle. And that triangle is apparent to anybody just sitting down. And I can't help but notice that the end of that triangle is exactly the end of the day. It does not mean that we will have to contain ourselves within that triangle for the end of the day, but it's definitely suggestive that we may be interested in making some sort of centralization attempt for the imbalance. And the imbalance is that blue line. I can't help but notice that this distance that we've made here at the bottom is actually the distance that it tried to make out of the top of the green zone, and it still could be a distance again in the future, as it's not a very uncommon distance that we've seen many other times throughout the day, potentially at many crucial points. Like, is it not true that we've made this distance here? And interestingly enough, I was gonna say, take a look at this distance. This one right here, from the beginning to the end, because that distance is very much like this one. That distance, like that one, and this one. And I find those important because did it not start that trend? And did it not start that consolidation? And did it not end that consolidation? Those moves were apparent at those times. And when those times formed, they were major reversal points. Huh, interesting. You know, another thing that's hovering around here would be a view app. I can put one in from the beginning of it all here. I think we're gonna hear it. Oh yeah, look at that right there in the middle. So out of all of the shares and contracts and volume traded on the Nasdaq index since we got to this high on Thursday, every bit of that volume has all amounted to an average of here. And we've just been grinding it and grinding it and grinding it. Not a move does not end at that level since we started this consolidation. A test of integrity. Now I couldn't help but notice that the 78% retracement, like our previous move, so like this entire pattern today, it's amounted to a 78% retracement. Like the big spike on the bottom, the circle, and the big spike on the top, all the way down to here. Basically chopping all the way into that first triangle, right? And that movement that we have right here, to do that, would it not be the gold bar? And under no circumstances are any stops safe above that gold bar, like I said, spike or no spike. And effectively, what would that gold bar be at this point? but the 78% retracement, like we did before. The one line that's in the gold bar is the 78% retracement. That's a 78 right there. It's kind of hard to see over the green, but effectively 78, you can see. And if I move it back, there it is. Effectively, here we are at the 61% retracement, something that could return back up to from the underside in the future. But we pause at it just to allow people to buy it so we can stop them out. At the end of the day, what's ironic is everybody that tried to chase that move is right, yet the market just didn't want them in because they tried to chase that move. If they were in from a different spot still holding, this move wouldn't be so threatening. But yet they decided to trade inside of the node, which is, I mean, we've never really talked about anything positive inside of that node other than the fact that it could leave at any given time. The best thing about it. And it will leave. As we can see now, we're testing the 61 from the underside. Everybody that tried to buy it is either hoping or getting stopped out at this very moment. So it's a very rough time, especially with the fact that, it's shown so much good usage of that 61 that it specifically doesn't like why would somebody treat the golden ratio like that? Don't you think it's a little suspicious that, if it is the golden ratio, why would somebody be able to have the power to determine whether or not it spikes past it a bit or not? Because that's what they've been doing. I believe that the 61s have been holding flawlessly. However, wicks and spikes do pass them. And like we saw at today's low, let's take a look at what it actually looked like on that 78. Because yes, the 78 was the low, but where was all the volume? Where did it actually count? If I take off those new fibs and we look at these old ones, this pullback here was right at that 61. That 61 is now the POC. And it pulled back, but you can see it went even farther and it hit this 78. But tell me it wasn't a spike back to the 61, spike back to the 61, spike back to the 61, consolidation at the 61, developing the POC at the 61. It's like everything that there ever has been past that 61 has been bought back up to it, no? At this moment, that is the case as well, as we are currently testing it from the underside. And you can't get really more accurate than that with how to put, the POC on top of the 61. And I can't help but notice that it is exactly the same pattern that we had, except it's a smaller version. And I can't help but notice as well that the 61 is still getting responded to on the short term. You know what I'll do? I was gonna say I can mark that, but the POC's there anyways. So I'm like, I'll just leave it. We know that that POC, literally the 61, right in there. And that doesn't look like it's changing anytime soon. But that's okay. We can move away from the POC without bringing it with us. In fact, that's how it goes usually. Somebody mentioned Euro USD. Take a look at it. So, like, one of the major things that I want to actually look at before this one is actually the dollar alone, but because that's the one that I've been looking at oh, predominantly. Wait, oh, DXY. And basically, this is how we're working this. The dollar, it's managed to spring out of this range here. You can see that that's perfectly aligned there. Now I've got another range in here as well, where you can see that the green zone was just hit, and we've been traversing through that relatively well. And essentially, these were all expected to break to the upside as the red yellow lines were specifically plotted with the intention of it returning back to this B point. I think that a lot of the hype and everything has been up to get that B point right there. And everything is going to be at an equilibrium at the point at which it hits that level. And that looks like it's going to be my green zone right there too. So I think it's in a really neutral area. The time to buy was below my red yellow lines when it was obviously chopping, when it was actually showing that value of being able to get up to these levels. And now, it's going to be clear that everyone's going to think that, because it's moving, they want a piece of it. And they weren't interested when it was obviously chopping and making the pattern that I was looking at. And ultimately, it's way too late in the trend to try and jump on that one, because I could put a fib on this one right here. And you can see we're almost at the 50. And I mean, if it doesn't mean it's not going to continue going, but it's just not good enough for me to make an entry on it because it's in the middle, and the trade was all the way from the past. It's like, it reminds me of Tesla. When I got asked about Tesla many times over, and I'm like, well, the time to buy Tesla was down here when I mentioned it, down here at the 188 200 to come back up to this level. And then when everyone sees it breaking through here, everyone wants a piece of that. I'm like, I am dying inside. Like, why not here when it was down? You know? And but the euro US dollar, it looks exactly the opposite of the DXY almost here. And it's in that same situation where we basically have that 50% retracement, like, and effectively, like, it's proof that if you find this middle area attractive, you are not comfortable with buying high or selling low, um, or sorry, buying low or selling high, or um, any of the sort, but interested in trading in the middle, where there's basically no, all of the movement that we can see led up to the middle has meant that this is the centered point where literally out of all of the people that trade in this area, it has offered more losses to the people that bought here or sold here. Like, because the people that made money off of selling for this end move down here, like the little, like, frothy end bit of this downwards move, they literally lost just as much as what they almost just as much as what they had. And I'm like, let's imagine you bought there, and you had to endure that entire pullback to get this, just to end up right back where you started for, like, what, the seventh time. So it's like, ew, right? I'm not attracted to that 100%. No, 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 no. They want you to be, though, too, because they say, hey, look at all this movement that's right there. You could be part of it. Why don't you give it a shot? And then look what happened. Like today's market, where it's like, hey, everybody, look, the market's moving really fast. Why don't you give it a shot? 10:30 comes around, nobody gets nothing. And everybody sees, oh, last week there was so much movement. I analyzed over the weekend, there's going to be great moves, everything like that. Look at how it moved for all the people that fought until the end of the day. At 2 o'clock here, they had to fight for. And now all of a sudden, people think they can come in the next day and actually get that in the morning. And without fighting for it, the market's like, no, SWAT, right back down to the beginning, give you absolutely no volatility. And it's typical. And I can see this. I'm like, just like before the volatility started, I was like, that was a day where it didn't take all day to do it, because everybody was conditioned. They're like, oh, everybody, at the end of the day, we're going to see these big moves. So I better just start showing up at the end of the day. Guess what? When I posted at everyone twice, it was the morning, because everyone was late. Everyone was like, oh, nobody's here, and nobody's going to catch the move. And I'm like, you don't want to miss this. And everybody's conditioned to think that they can show up late in the day. And I'm like, well, it's just too tough for those people. And I'm like, I recognize what it takes because I'm in. I catch it every single time. And it's a matter of making it clear, and it's definitely not easy, but it's what's required. And I'm like, well, what other move should you have been taking if you weren't taking that one? Because that one was the best move to take. And it's like, unless you're comfortable with less, and having less moves, I'm like, well, it really, really, it shines on, when you're like, hey, like, I have the patience to wait for the best moves. I have the discipline to not have to trade the crappy ones, and essentially, the patience to wait for what you want because you deserve it, really. And that's one thing that's different, and a lot of people, they sit down, they think that they're working just like when they're at their job, and it's like they can't wait, they're looking at the clock, when's the day going to end. I'm like, I wish I had more day, I could go again, I could go again, and I used to every single day, I used to stay past the office, and I would literally sleep over and stuff, and all kinds of stuff. So it's that's what it takes, and that's what that's I love that I did that though, because it literally has it's like building the groundwork properly. Because, wouldn't it be scary if somebody was just like, oh yeah, here's a really, really profitable account, good luck, hopefully you do well with the money. You're not gonna really, you better know how to keep that account running if you're gonna do it right. And it's like, okay, well, you know learning how to make more money out of the money instead of spending it is the only way to retain that money and to continue being able to make it. And the individual seems to think that they can just get out with a quick buck and reset for the next day. And I just think that the market will eventually catch up with you and your strategy, no matter what you're doing, unless you stay on top of it. And I'm like, the best way to live is to stay on top of it, to have an understanding, to know that it's difficult for every other profession that went to school for years and years and years and they just can't do it, but you can. And then they didn't even believe that they can do it, and then they quit early, and they do all these things. They have so many reasons, and if there's one thing that I like about the way that I do it is I don't have any excuses to stop. I don't have any excuses to not understand. I don't have anything that I write off as, I'll tell you, I think an area is crap and stuff like this one for sure, but it's like that's the play, is like knowing that that area is crap. Otherwise, you've been invested into it, trying to make it something that it's not, and that's tougher. It just is. And I mean, like, I've been there a million times, like, hoping, how do you think the 11 low zone started? I'm like, geez, that one more trade, one more stop out, one more end of the day run. It's going to take a little bit of more than you think sometimes to actually catch that. But to make sure that out of the entire area that you can continue with your exposure and remain safe, so you've got that exposure safely locked in, and you know that you're ultimately exposed to that trend break that you want to be exposed to, which now is the other yellow line. Hold on. So I've basically made this yellow line, and now it's going back to this one. That's how it works. So as I mentioned, at any moment, anybody that dragged their stops above that gold bar just got wiped out. Anybody that traded back to the gold bar, if you hedged it, just like you did from the top, maybe you're like, oh, I lost my long position and I want to hedge it again. Same move, same 78% retracement as we did before. And it's not going to go back in time. Get that. But it's still an intriguing level. But like, if you've ever been on the best sports team because you worked really, really, really hard and you were there for every practice, and you were there for every game, and you were there and you did it even when it was raining, and even when the coach was mad at you, or even when you went through difficulty and you injured yourself and you had to continue, but then you won the championship. At the end of the day, understanding that all of those things were necessary to get what you needed. If you've done a lot of really tough things that is actually, you've come out on top of, then that's one thing. It doesn't have to be made as tough as it was for me. That's for sure as well. When I explain these difficulties and so on like that, that's so you don't have to experience them. You know that, right? That's the deal. So you don't have to experience them. You want to be repulsed to the idea of being caught in one of the traps. Like, oh, this shoulder is going to be blown out and it's going to hurt everybody. Well, it doesn't have to be you because you know that it's going to hurt everybody, right? That's the point, you know? And just to make that clear, at the end of the day, it's I explain the severity of the situation because it was incredibly severe for me when I was on the other side of those lessons, or when I saw other people on. And not every lesson have I learned myself as well, right? Like I've worked with a lot of people and stuff, so it's it's not necessary to have to do everything yourself. Like back in the day when everyone was, when there was no Discord, no like internet as we know it. People traded on their computers in their houses by themselves, right? I mean, like, what are you gonna get on the landline and have a multi-phone call? You might have. I mean, but how many people were doing that? You know, and it's like for those that were, I'd like to think they were better off than those that weren't doing it, right? So it's like kind of intriguing. So this is the same equal low for those people that have caught the POC lower. New trend is also formed. Two of the long-term VWAPs are very close by. I can't help but notice. The shortest term VWAP, I can turn this one down a little bit just to there is a lot of pressure put on the yellow line ultimately as well. Doesn't have much time to respond to any one given level. I am somewhat curious about its ability to make a third consecutive high, which is kind of a stretch, I would think, no? And but that's the what I'm seeing here. Those. And after all, it would not be uncommon for it actually to make a third high, as it only It has too. This was the equilibrium in the morning here. Level. I also can't help but notice the similarities in the way that it managed to go down here and the way that it managed to go up here. I didn't notice it in the same way, but I noticed it like this. Not exactly the same, exactly. That's why I was like, all right, well, this low and then this low, that's what's similar. Very similar. Of course, the falling wedge does a good job at containing those lows. Now I'm like, well, hold on a second, because did you know that this entire area here and what we've done here is very similar except for one thing. This low managed to create an equal one, this one hasn't. One other thing that's intriguing about that low is that there is an incredible amount of volume still on top of this entire area. But from this point, it gets lower drastically. Now, the only other time that's like that is up here, just from an analytical perspective. Ironically, the only move that we've ever had on either side was this one. This move, it has been used twice to break the downtrend and reverse it. Because is it not true that at this time, where I draw this, this, and this, like that, okay? Each time that that's happening, what we're doing in that instance, breaking that downtrend, is breaking that downtrend. And what are these downtrends, if not the two most predominant downtrends of the entire day? My question is this how it reverses when it reverses? Because it's how it has reversed when it did reverse. So if this and this, okay, sorry, if this and this are the exact same version of each other in so many different ways, except for a minor difference, are we going to see something like this? And are we going to see something like this? Interesting. That becomes the question. The downtrend. Okay, and another thing as well. Those two trend lines that I drew in there, the red ones that were the predominant downtrends, is it not true that they had to break in order to get it to reverse? And on breaking them, it did reverse. So could the break of the trend trigger the reversal as it did last time? And which trend triggered the reversal last time? Was it the one that started off of the first major pullback? You could see it was going down, 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 and then major pullback. When it made another low, it created a trend. When that trend broke, it was over. Now, it wasn't just that trend breaking that could make it and an exposure to it. Like, look at this original one. The original falling wedge, when it broke the trend, it didn't want to just reverse for the people that had it. It wanted to be sure that you wanted it. And it already made one and then two lows. Ironically, that third low wasn't actually the third low. This one was. Cheeky, no? Because that's like the audacity to do that to them, right? It's very, very tough. But I'm like, it is in retrospect a third consecutive low that reversed the trend. Doesn't matter if it was on the retest or not. And ironically, it's the same case here. You know, out of the three major lows that we can see, okay, that raises another question. You know how it took this much time to do that? How much time did it take to do all this? I'm like, well, that raises an interesting point. Is this much time? Well, roughly. It looks like it's a little bit more time than it took to do this. Very similar to what I would say is like an 11 low zone. Remember when I said in the morning about the schematic for the 11 low zone? Let me quickly draw it again. When we started at that clear entry where I was like, clear. Okay, sorry, clear. And it's like it could be anything from a falling wedge to a 188, just to some pattern that's really clear, and it has everybody be a part of it. Then it goes up, 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 and it creates this kind of consolidation, and then it dumps, and then we chop at like the 78% retracement, and then it rallies up to hit like a support line, comes back into the range, and then finally goes. Remember, this was part of it for these people, like it is today. Because this could have been the clear entry. This could have been the retracement and the attempt at trying to get that continuation coming back into the range. People must really want it by this point, but you want to know what's crazy about that point? This trend's formed. People are closer to giving up than ever, but yet do they realize they're part of like this movement potentially. So ironically, this B point does not usually get hit on this move, but this one, in my experience. Not that there's even a B point up there this time. Ironically, what I was looking at before was a head and shoulders to inverse head and shoulders and all in one. But what we see here is a little bit different. Is it not true that it could be something closer to two highs into three lows, insinuating that this line here has incredible capability of breaking if exposed in the right way to it? Now, for the people of today, it hasn't made it too easy for people to be exposed to it, as it's continuously clawed back on anybody that has a position in favor of that line breaking. But it moves as though it's trying to get your position. That's one thing that's interesting about it. And it will certainly seem like somebody has kept your position after they've taken it from you by the end of it, which is kind of a rough way to do it. But interestingly enough, I think that that same kind of environment that I just basically showed in the schematic is underway in here as well. Where it had a clear falling wedge with no real, it doesn't have to be the falling wedge. You could say a clear inverse head and shoulders. But anybody was put to the test instantly on that. And then anybody that tried the continuation was put to the test again. That's like the second time in the schematic. it's different in some ways for sure. But at the end of the day, one thing that's majorly different is the way that it does its high. The way that we did it today was like this, like that. To be honest. So interestingly enough, I find there's a lot of similarities to the movement that we have to the upside. Being the first, and then coming down to test it, very heavy retracement upside, then down to test it, and then basically back to threaten the high again, back to threaten the high again. Threatens anybody out that tried to catch that original pullback, and then leaves through the top, and then leaves through the top. We shall see. What it does here as well is provide us with a sideways, up, and then down, back to the middle. We've done that move now. That move exists here. And that basically acknowledges the S wave as well from both sides. Can't help but tell the distance that we made in the consolidation is very similar to the last consolidation that we made. And the spike that we had out of it originally is also very similar in many cases, like that we had here. And throughout the entire process that we see here, of course, the whole thing is within a triangle. And, that's still apparent with this major high and low that we have here. And that can be seen on this schematic as well, the same kind of triangulation, even on the smaller one. It's like the people of the original inverse head and shoulders have been put to the test many times over. And it's like that move happened directly on the open. Very similar to the movement that we're at right now. We can also see another thing. At the time of which it was meant to come down, one of the major things that there was a consideration for the return back to the blue line. And of course, any positions that were captured inside of the green bullish reversal pattern could be hedged at that point for the deep retracement back to the 78, or what basically could be a 78 anytime we see this pattern. At the end of the day, it's a very major retracement, sometimes leading into even more of a retracement than 78, like the 88 or the 95% retracement um, that we saw last week at some points. this pattern we see right now, pattern that is very intriguing as we do make a high and then an even higher high, another higher low into this pattern here, where effectively started with a low with a lower low and a higher low, and ended with a high, higher high, or high, where it's very interesting because on both sides of the equilibrium, both sides of the spectrum, we're left with even equality, 1, 2, and 3 highs on either side, with the middle one being the farthest. No? Is it not that the case? Because it is. So understanding that is something that can happen very frequently, and basically we come out of an environment that's used to seeing 1, 2, and 3 highs, that's used to seeing 1, 2, and 3 the highest, used to seeing this kind of movement, and then we do this. It's a weird thing because I'm like, who's it good for? To have people screw this up so well. Because it's really what it's doing is it's not really doing the head and shoulders properly at all, yet it has the confines of a head and shoulders and an inverse. So perhaps this is a way to get people out of the way, because it does create a triangular shape as well. But one thing that I find is intriguing that we may see more of is 1, 2 highs into 1, 2, and 3 lows, which could be something of the sort that we're seeing right now. I was questioning its ability to do 1, 2, and then try and do this. Then it had 3 lows, which wasn't quite typical. By that point, we have a little bit of a channel. And that channel that we had there, looking at it, um, it managed to double a little bit more than that, and it came from the same size movement. So I find that intriguing. Managed to take such a specific area like this and double it on both sides. You know, it could mean what we were doing in that area has come to an end. Met the equilibrium. Can't help but notice that the blue dash line is coming in though. The question becomes, by the time that we've hit that area, this red yellow line and this gold bar will be put to the test. I guess you could say the red one, but I really do like the gold bar over the red one. Like people will be looking at the extremes because that's what they're used to, but I have a different relationship with the level than the average person because I do like the gold bar for what it was when it began, which was something far beyond today's spectrum. You know, from the last time that we were ever in this area. Intriguing. Yeah, there's a few things that I can see here, like the triangle managing to push itself out of the bottom a little bit farther. Interesting way to take a movement like this and place it upside down on the other side of itself. Here. Like very, very, very similar in every single way. Like those angles are very similar. And bringing that shape over that I just used could be of use as well, but kind of shines a light on the extreme. Perhaps the high that we made on this extreme also. And even when we manage to come down, the idea that it made an effort at making it a 1, a little bit of a high here, 2, a little bit of a high there, and then 3 advances down. 3 advances down separated by 2 pullbacks is 5 waves. And I mentioned that because, what did we have here? Well, it was 1, 2, and 5, exactly the same. Have it here. The downtrend is readjusted technically on here. More associated with that line than it is the new. Now, of course, none of these lines effectively can change the fact that it's in a downtrend until it breaks the red-yellow line. Ironically, there is some time that it could make new patterns within that area. I can see that we've produced this move again outside of a very similar environment where we have a chop with sizes on either side. Deja vu on that one. I also can't help but notice that this is, it's nothing like your average M, right? But it does have two, it comes from these two specific highs, like they're relatively far apart from each other. That distance that we have right now, exactly the same. But I question whether or not, like this is a messed up M, we could be interested in a messed up W. And honestly, the W doesn't have to look nearly as messed up as the M does, because that's, I mean, you would never draw an M like that, right? I mean, you would draw an M like this, if anything. But like this, I mean, that's a bit much. Definitely. What's intriguing about it is like your normal M, it's not too far off. Okay, it is completely crazy, but it is not too far off. Now, what's the components of an M? Well, of course, we start with a run up, and we meet this area where effectively it is a consolidation. Because how is it not? Well, we hit this point once, twice, three, 4 times without moving away from it. We make it even on both sides, and we're not a consolidation. We make a complete S wave twice, and we're not a consolidation. I mean, it does a lot in there to show that it's even around this level. All you have to do is look, and at the end of the day, that area then entirely doubles to get us this area, and shows us that it too wants to make a meet back into the middle, giving us this pattern yet again. Interesting perspective. But and my point is there's some things that are going on there too. So do we not come up into an uptrend, or we come up from an uptrend, right? And we go into this area where it's otherwise into a consolidation. We cross this point a million times, right? And then and then we end it in a downtrend where it too is interested in testing it from the underside, making an equilibrium, making a test from the underside. Like that. Because if it wasn't an M or considered an M, well, why would it act like it was an M? And what's funny is like the M inside of it plays out perfectly. It shows everyone how the M is supposed to work. But in my opinion as well, one thing that's really interesting is the more understanding that you have, the more difficult it is to stop. Like people, it's easy if they just see the chop and they're like, "Oh, another chop. I'm not gonna know what to do with the chop." The chops are like a negative experience. I'm like, every run has left the last chop. At the end of the day, unless we're never gonna run again, the chop's gonna have to end. And just remember that it's chopping for everyone when it's chopping. And it's going to end for everyone as well. There's going to be some people that are there for it and some people that won't be. Some people will neglect it, some people will accept it, right? I suppose you could say. Very interesting. That's how I think of it. And it keeps me positive. I'm like, well, they're not going to catch me not catching it. I'm like, it's like if I have to wait, I have to wait because everybody has to wait too. I'm like, it's just part of the part of the day. And it's like I think back, I'm like, is waiting so bad? I'm like, well, I could be doing other things. At the end of the day, it's not so bad. Um, I can't remember 17 days ago when we were waiting on that day. What about 47 days ago? What about 379 days ago? No, I don't remember because it's all phased away into whatever day that was, and I'm cool with it. That's just the chop that there is. And every single one of those chops from every single one of those days for every single one of the 3,000 days that has ended to this point have ended every consolidation. Every trend is broken as well, unless you're looking at the long term one. And I mean, that one didn't. We did break that one actually, and we're hovering near its break. Like, let's take a look. The daily. This trend right here is undoubtedly the entire uptrend, right? And like, I know there's a lot of short-term analysis on there, but you can see clearly that it made it through it and that the new trend is this one from the high. And we can't even see that yet on the 1 minute. It's off the chart altogether. Getting to that trend is like getting to this one. Like, let's take a look at that for a second. What's the difference? Are we in a completely different situation or what? I know it's a little bit hectic on that chart, but you can see there's still a red yellow line coming from the high, and we're having to break up to get to it. The same kind of concept is in play there as well. Same kind of concept just happened that we have here. So you know how there's this yellow line? Well, this one had to break in order to get to it. That over and turn it up again. Because that distance, it doesn't go away. I mean, it's a mathematical distance. It's how much it made out of the other side of the range, but not placed like your average human being would place it, not placed on the extreme. And it makes it parallel on a different level. You'll see they will stop the selling at the appropriate level. I am curious as well if it's just going to be a minor counter trend move after having made that point, because you know what we could do is come back to the blue line and hold it. So that's another major thing as well for the end of the day. Because one thing about breaking that red yellow line is it invites potentially this move from where we break it. Just like when this broke, oh, here, and we came from this move, it gave it to us here. Same thing might happen here. Just like when we broke this move and it gave us this move here. I can't help but notice that we made the same distance on either side of the um, gold zone, with this being a distance that would suggest it's an equilibrium met from the top side. So the first time we've really made it an effort to make a support out of it. I think they're going to give a go at trying to break the green zone in a moment. Using the gold as support is acceptable. I think that it's made an S wave on it to show its importance. Of course, we've been adding volume to it. Of course, every single area that has been bought up to the POC, you know, the volume is outlined by that gold zone. Everything below it has been only wicks and spikes that are very minimal amount of average people that are in points as we get volume really from down there. A lot of the people, there's more people getting stopped out down there. Like for the amount of buyers that there are, it almost seems like they've sold in the same spot, you know? And that's rough. Like they buy down there expecting to be able to get it, and they end up getting stopped out down there as well. And at the end of the day, um, you know, those positions will be held through the break of the yellow line. I'm confident. But not held by the original people that took them, but by the people that accumulated by the end of this consolidation. And of course, it's like I said, for anyone holding from a previous low, it's like a show. The 11 low show, call it. And after a day like today, you could suspect that many of the people would assume that long-term moves won't come out of it. They'll assume that it's going to be choppy. They'll come in with an attitude that it'll be similar to the way that it is today. And when it's moving, they're not going to be comfortable with it because they're comfortable with this range. Like all their stops and everything are going to be set to really tight. And then when it starts to move really heavily, they're not going to be prepared for it, especially when it's in the morning time and they're stuck in that wait and see phase. So I think tomorrow is going to be kind of a little bit more interesting than today, to be honest. The end of the day here could be pretty packed though with moves.
Yeah, I agree. I've been sitting here silent, listening all day. It's been an okay day for watching.
Yeah, it's kind of a slower day for sure.
I was looking at this little falling wedge pattern that you got your yellow line on. Uh, totally looks like a fake out coming here.
Yeah, the yellow line it was retested, and I think that as we get closer to this blue like vertical line, which is the marker for the imbalance, I think that we're going to try and make it through the red yellow, I think. Could be a fake break initially, but I think ultimately everything that's acquired on the fake break, it should actually lead to the red zone by the end of it all.
That'd be interesting.
Yeah.
Yeah, I feel like it was a weird Monday. Just I was reading a bunch of other stock news too. It was just weird. Everybody changed their minds over the weekend on what's so funny. Anyway.
That's interesting.
Yeah, all the buys went to maybes, bunch of sells went to I don't know. It's just everything went weird. I think it's just Q3 jitters. Now, of course, I look at this whole thing different than you do, but yeah,
Hmm.
I have to start getting my mindset for what I'm going to do. I've got choices to make mid-month, so we'll see.
Yeah.
Definitely still like a year away from putting any money on this.
Hmm.
Probably more. I'm a
Yeah.
chicken.
No, that's fine. Like, yeah, you should talk to Randy. Like, he took his time with it too, and I think that's the right way to do it. You know, making sure that you do it right and making sure that you understand anything before you take action on it, right? Like that's where I come from.
Yeah, because I mean, if I do something, I'm not going to go half in on it. I want to know, and then I want to make it worthwhile for the time I spend on it. So
Yeah, exactly. See, that's a really mature way to look at it. I respect that 100%. Huge fan. Because there's a lot more think the contrary to that, which is jump in and like without like and it's very difficult to teach when like people make like rules for themselves when it comes to like being able to just jump into NQ and stuff like that. I think it's really risky to jump into NQ. And I mean, I always wonder because like if people worked for like a firm, they would have to explain why they did it, right? And to themselves, like even when they lose money on it, they don't even try to explain why they did it because they don't have any good reason for it. And it's like because they wanted to make more money in it, or it becomes like because it was a stupid decision, and it comes down to like discipline or something like that. And that's one
yeah,
major thing. Yeah. But yeah, it's a good way to be disciplined. House of Red, Yellow, Lime. Yeah, all this chop that we see before and is likely to get a retracement to it in the future. So all the blast that we see subject to coming back before the true continuation. That's fine. Absolutely fine. Most of the blast has been taken back there, which is okay. You can see they've basically taken it back to the POC, and it's like, how many times have we hit the POC today, and how many times have we made it even on either side of the POC? And do we have it currently at a point where it's made it even, or where it can make it even? So it's made it even at this point. At the bottom, you can see we've spiked out of the bottom of the POC this much, and we spiked out of the top of the POC this much as well. Good. Centralization for the imbalance is definitely it's like an environment almost. The act of centralizing for the environment or for the imbalance. It's very similar to centralizing for the anticipation of a report. Well, that's what it is, really. Centralizing for the anticipation of the report on the blue vertical line. Nice. Back in the continuation phase, trying to get on top of the node itself. Working out very well. You know how we did with this S wave? We've managed to make this distance, and it makes me curious about it trying to make the same kind of relationship with the green zone that it did here. It's only effectively running up on that W that I mentioned. As funny as this M looks, W did form. We're looking at that M I left drawing of it, but essentially I drew that M in and it had that little bit of a smaller M in the middle and it came down and it formed this could be a W. I mentioned it could look as crazy as the other one, but it's not actually too bad. But one thing that's interesting about it is that the W itself, it has a M inside of it. It's fine. Okay, that's very interesting. All right. Do you know that this spike here and this spike here, oh, it happened here. But what happened after the second time? The second time this happened, came down to the low, did after, and then it made a secondary low. Then it returned back to the high of the first triangle. Now, what's interesting about this is these first movements here had a first low, but never had that predominant secondary low. It means that when we come back up to the high of the first triangle, be on a W, and this will be. So I'll go over it again. Basically, the idea that we had a day where there was a lot of movement in the morning, got everybody excited about the movement in the morning, rushed out of the falling wedge. Now this is the falling wedge that worked over here. So everybody in retrospect, when they're like, oh, what caused the reversal? Let's go for that again. Let's make that part of our strategy again, right? And then they went ahead and used the exact same triangle. I just dragged it over, the exact same thing, right? And essentially the three lows that are contained within that triangle are also a third drive pattern, but it also happens to be first head and shoulders. And then it rallied, not even 10 minutes after the open, it was here, 9:39, 9:40, right? And then basically what did it pulled back on anybody that was part of the immediate rush at the open, the majority of the people. And essentially, when it did that, it offered them a head and shoulders. And this is a pattern that we saw that was, had great impact last week, but it particularly worked like this. And it had the right shoulder on the top of the left, in between the right and the head, or sorry, in between the left and the head. is where you'd find your right shoulder. And effectively, this is the first real pattern of the day. I guess you could say that it was formed on today's volume. And the clarity of it was that it came down to this point, which was basically its neckline, and it ended up essentially failing with the same amount of movement that brought it into the triangle it left it. And the head and shoulders effectively was doubled in the opposite direction. And that's opposed to it working so well on the previous days as we went over before. The high of day multiple times, right? You've got a clear head and shoulders. This week, the pattern not effectively working so well, but part of a giant reversal that had a triangle on either side, basically. And then we saw a smaller version of that here. But the thing that's interesting about the smaller version is the smaller version contains, ironically, what I think is the next step in the sequence. The market essentially moved very similar. It made like this weird like three drives pattern, right? And came down. And that weird three drives pattern was part of a spike. Like okay, the pre-market it was a little slow coming back to it, but that was a spike, okay? Came back faster than it was made. And then it came up and then it did that three drives, right? The third one being the very, very high. And then that led all the way down to a 78% retracement, which meant that there was only this amount left. And then we went into this here movement over here. We went up into one, two, and three consecutive highs, very similarly to how we did before, and then made a very large 78% retracement and then took the rest of it back. 'Cause why not? And at the end of the day, what's ironic is everything in that sequence right there is exactly the same except for the way that they treated that falling wedge, the second one, the one that wasn't the extreme. And then what did they do? Because at the point that this one already played out once, this was its secondary low. Okay, so we don't know really what happens past that secondary low. But in this sequence, the same thing happens exactly the same way all the way down to this point. We meet the secondary low and we end up here. Well, this point never got the ability to develop all the way up to here. But this one did. And ironically, if this one does, it will be here. Because where it's went to in this sequence would be here. And that is the ironic part about that situation. Very intrigued to see how the end of the day goes with it being that similar in every single which way, shape, and form. Like the way that we have down, then this one here have making the same kind of, except it came all the way down to here. And this one has this secondary low as of now. But ironically, this one's returned all the way back up to the high, and this one's just returned to this point. We're here, bigger picture. If we returned to here, oops, or here, that movement would amount to this movement. amount to here. I don't care what time, as long as that's the move that it's spending the time doing, then we know which one to be on. And it's not like it's a incredible move either, but for the sake of understanding the environment, and I mean, look at the schematic that I drew originally. Like the idea that we can scrap this part of it right here, okay? And let's talk about the way that it comes down. And it came down and it chopped everyone out. Like all we need to know is that it came from a lower low, lower than this low. It was a clearer trade. And then it came back on everyone and did this. And look what it's doing. It came from a lower low and it was clear for everyone, and then it came back on everyone and it chose to do this, which is a spike back up, giving everyone hope, and then returning back to an even lower low or similar low before actually continuing the trend. And like we saw many times over in the short term and in the long term, when we make one of these moves, it's very likely that we actually create very similar kind of movements on on either side, like we were doing here in reverse. And the whole idea is we could do the same thing with this movement and take this movement here, put it out the other side. The imbalance is coming up in 2 minutes, so any trades made from this point on are subject to getting direct exposure to imbalance and all of the risk that it entails and the volatility that it has when it makes big moves. But yeah, there's a lot of similarities to what we have with the average 11 low zone. However, not exactly the same. The one component that I would say is crucially different, the fact that it doesn't come from the underside test of a blue line. Instead, it has a very interesting method of using a blue line instead. And that's this, inside of this consolidation part where we have a triangle and another spike, there happens to be a high that when it gets past this high, it comes back to it first before dumping through it. And effectively, that's the high of this consolidation, as it is this high of this consolidation, separated by the spike on either side, as this one was too. Um, Imbalance. 1 minute. Of course, there's a new short-term trend, and it is of interest because of the imbalance, and its break may not be so. Um, the longevity is up for question. At the end of the day, that line it's subject to breaking, but just for readjustment to a more appropriate line. Not much of a move on the imbalance, not too much volatility volume. The yellow line breaks, but I think it's just for a readjustment. it testing purpose, I suppose, but thinking again along the lines of the trend, it could work a little bit more like a blue perhaps. But a new trend will form, and it's likely to be important. And the best way to lose steepness quickly is break and retest. Like if we're riding a trend and we break that trend and then continue riding it, what happens to that trend? Well, it's not this trend anymore, is it? This one? No, and it has like that 65-degree trend. It's not gonna last, right? And it's like, can it even test it again becomes the question. But then it's like, okay, now we have four. It's nearly cut in half, right? So it's like huge difference. And that means that the distance that it can actually trade before threatening another trend break is actually pretty good. Because the distance that it has in this little area up here between breaking the trend is so minimal, but now look at look at how far we've got before we, how many patterns can we make in here before actually having to come down. And when it does things like this throws people off the most, because when it gets back on top of the trend and starts using it like a blue line, like I mentioned it could, retesting it, using it in the future, getting involved with it, it kind of is a thing nowadays. Very contrary to popular belief, especially for the people that are used to it going back and forth in this range. After all, it's at a level that's quite controversial. Do you remember in this sequence down here when we went up once, twice, three times, and then it came down really hard to the same controversial level? But then we made a secondary low. When we made that secondary low, what do we do when we get back to this point? Chop the crap out of everybody. And it went really, really, really haywire for a second in there. There's almost like a little consolidation zone in there, you know? And that's when we got to this point right here. You know, after we made the big run up, dumped off, we made a secondary low. When we met the high of that secondary low, that's where I'm talking about. This is that chop. This chop is what we could be doing before doubling the secondary low. That's how controversial it is. Because it took that entire area and doubled it and some. So if we were to take that, you know, big run up and the dump off into the secondary low and double it up, that would look like a big W. And at the end of the day, that would be the price of actually making that turn into a W. At following the big run up that had the three highs. So very controversial. For the people of the after hours sessions, perhaps, comes an interesting question. If you think about it, like how much did this secondary low retrace into the big move? Let's talk about it like that. It took it all the way back up to a 94% retracement, right? Or no, 100% retracement. Interesting. Maybe maybe we're looking at something pretty similar when it comes to this one. Maybe the entire low is a low to a W, and that when we pass this point, it becomes a B point that we can then come down to in the future. Now it's blown it off the charts, and it's like now makes me question whether or not, when we get to the high of this W, it'll even care about this level. Because did you know that this is a W right here, and it did not come back to test itself? You know that if we did that on this W, the results could be astronomical. Not to say it's going to do that, but probably going to come back and play out, not going to lie. At the end of the day, I'm not going to complain if it doesn't, but if you ever drag your stop above that level, it is subject to getting stopped out on the playout. To be honest, this one could have a playout too, and it would be rough to Experience the pullback all the way to that level, right? But the people of this trend that expected that pullback just got stopped out. And now they're part of making this larger W. And I wonder who that's good for. Question. Seems to be pushing on the wound. I guess you could say, I don't know. It's like that though. The people that were playing this bearish pattern got absolutely smoked out of it. And it's like, well, what are they going to try the big one instead? And the big one, it might, although it might work, it might be difficult about the way that it plays out. And I just wanted to talk to you about this as well, that in the schematic, it ends, how? And of course, there's a minute and a half to the close, and we're in the, the red zone. You know, any accumulation that literally has been accumulated in that green zone. Anybody that got stopped out trying to go for a long trade in that green zone, it effectively got sold off to a person that intended on it moving to the red zone. And the red zone is what they got by the end of the day. And that's interesting because it took a long time, patience, discipline to get to this point. But this is the point where, and it's not even the actual end. The top of my bar is exactly where I believe it wants to be, which is the 161. It looks like, and then I'm like, well, look at that 200 right in that purple zone again. You want to know what I think we're gonna do with that? I think we're gonna come down on it and test it from the other side. So like, so like this level. So basically get above this level and test it from above. Yeah, that's what I should say. That's the end of the day. But basically, we can see that it's well moved into that zone, and that's the uh, that's the end of it. Taking some profit off and making sure that you're safe to hold through the end of the day is good. And hopefully, you guys had a wonderful day. It was a little bit of a slower one, and hopefully tomorrow's a little bit more volatility. I would expect so. After all the accumulation that was allowed at the end of the day here, and a little bit of a profit for those that we're part of it, and I expect that profit to be put to the test overnight too. So beware of that. Hedges may be appropriate for the break of the blue and yellow line, but we'll take a look at them overnight, and I'll catch you guys later.
Thanks, son.
Yeah, anytime. Have a good one.
Bye.
Yeah, have a good one. Take it easy.